Hi everyone, I'm Mirala Chobano, lead editor with The Papers. We continue our series of articles and videos that aim to bridge the knowledge gap between DeFi and traditional finance. This year, we are going beyond the buzz to show real use cases of how digital assets are transforming the financial industry. Today, I'm sitting down with Avinash Chidambaram, founder and CEO of Cybrid, who will explain how stablecoins are transforming B2B payments and payouts, what limitations does legacy infrastructure face in 2026, and how financial institutions can begin integrating stablecoin rails into their existing operations. This conversation is designed to help banks, PSPs, and Web2 payment companies understand the practical implications and opportunities of stablecoin adoption. So, without further ado, Avinash, so happy to have you here with us.
Thank you so much for having me.
Yeah. Can you briefly introduce yourself and explain how your professional background led you to found Cybrid?
Yeah, sure. So prior to founding Cybrid, I had founded a company called Ario, which is in the embedded lending space. So we had to do a deep integration to a bank to both originate loans for trade financing, so, extending 30, 60, 90 days of credit, and then managing the payments solution in terms of pulling payments to repay the loans. And it was a complex integration, but ultimately we were dropping files with a banking partner, which is a pretty old school way of doing things, sending SFTP files with ACH transactions in them. And then prior to that, I was at a company called Interac, which is a debit network in Canada. It runs a product called eTransfer, which is exactly like Zelle in the US. And I had replatformed that to focus on B2B payments to increase the value to $25,000 and to allow people to make business to business payments using that platform. And so there was a deep integration I had to do to a whole number of banks, and then really sort of understood what the settlement process looks like under the hood. So you can make money look like it's instant, like when you swipe a card, but really the money is moving very slowly behind the scenes, right? And then prior to that, I was at BlackBerry, if you remember your BlackBerry, and I was responsible for figuring out how people can make payments and do P2P payments in 138 countries. So it was a large project with a global scope, trying to figure out how to integrate to all the unique networks and local payment rails around the world. Um, and then that led me to Cybrid. And really, like this, I've said this story before, but I have a brother who lives in Japan, and I wanted to send him some money because he just had a child. And it was so painful to, just as an individual, send $1,000 to your family member, on the other side of the world. And I said to him, like, maybe I'll just send you some Bitcoin. And we were on the phone, and I did the transaction. He had opened an account at an exchange, and it arrived instantly while I was on the phone. And it was like I'd sent cash to someone else around the world in minutes. And so if you've been in payments for a while, that starts to get you thinking about this is how it should be, right? I should be able to send people money instantly, and then treat it like I've sent them cash because that is what that they're looking for on the other side. So all that led us to building Cybrid, which is a payment orchestration platform focused on enabling people to do payments with stablecoins, and our focus has been on enabling businesses to do those kinds of cross-border and domestic payments using stablecoins.
Yeah, so I hear now 128 countries. This takes me to global. I hear settlement, integration, B2B payment. So you've been exposed to the whole all array of types of payments and cultures and the way money moves. So most probably you know what are the biggest challenges in B2B payments and payouts in 2026,
I
particularly
think
in cross-border transactions.
Yeah, if you think about it, we're arriving at this time where, first of all, every business is a global business.
Yeah.
We there's almost no scenario in which you can start a business and not interact with either customers or suppliers globally. And if you think about, manufacturers, e-commerce companies, etc., they try and pay their bills at late as late as possible. If you're a CFO, you want to hold on to your cash and you only want to make your payments when you need to make your payments. So modern ERP systems with AI tools and stuff built in will start to tell you, hey, you're running out of inventory. And what do you want to do as a business? You want to wait until you absolutely need to go and pay your supplier. And then as soon as you, and the supplier is not going to ship anything to you, they're not going to manufacture a run until they've been paid. And so
Mhm.
what stablecoins and cross-border payments using stablecoins allows you to do is to really shorten that cycle. So if, for example, I was buying goods from China, like everybody in the world seems to be doing, and selling them in my locally, I need to think about how long will it take for me to pay my supplier? And oftentimes that can take weeks. So now you're, as a CFO, you're calculating how long will it take for me to pay the supplier. The supplier will only start manufacturing or they'll only ship once they receive payment. Now, if you shrink that context and you shrink that time frame, now CFOs are holding on to their money for much longer. They're able to use it for other use cases like acquiring more customers. And then when they need to, they make a stablecoin payment or they make a payment overseas to their supplier using stablecoins and it lands within minutes, whereas typically it would take days. And the other thing that's really interesting is there's you can confirm that the funds that were sent were received by your supplier's wallet. We can confirm to you that the supplier converted that to their local currency and has received payment at their local bank. So that kind of feedback loop is also very important because now both parties can see I sent money from here from my wallet, I was received it over here on my other wallet, and we don't and you can prove it, by looking at the blockchain that they received that payment. So that starts to really change the way CFOs think about how they manage their payments, um, because they have more control over their cash. And then we just have to look at how the world is sort of moving to this environment in which you have, these AI tools that are telling CFOs this is when you need to make a payment, right? So if you look at some of the ERPs that are coming to market right now that people are quickly adopting, they have these AI tools in there that are telling you on a daily basis, here's what your inventory looks like, here's how many bills that you have to pay. And so you're starting to change the experience where a payables or a CFO says, okay, I want to pay these bills and I want to do them on this date. And you can set that up and it happens automatically. And you know very well that the recipient has received it on that day. So that's a really interesting value prop because it's not just faster payments, it's also a whole lot cheaper because you don't have all these intermediary banks holding the money and then taking a cut and then holding the money and taking the cut, right? If you try to send money from here to say you're buying goods from India, there are multiple intermediary banks that will receive the funds, take a cut, and then pass it on. So you don't actually have, you know, absolute knowledge of how much is going to be received on the other side. So it's faster, it's cheaper, for you to do that. And those are the two most important contexts for CFOs, right? Can you make the payment go faster and can you make it go cheaper?
Yeah, I love the fact that I asked you what are the challenges, and in a way, you went directly to actually what stable coins change to overcome those challenges. I mean, in a way, you mentioned, yeah, how these challenges can be overcome. So we'll skip the part, let's say, with the challenges and focus, yeah, on the positive side. And now let's say, okay, you convince me that these benefits, I mean, they are real. And yeah, I am a financial institution or a PSP that I would like to process B2B payments using these new rails. And yeah, what are some practical recommendations? What practical paths should I take to adopt a stablecoin?
Yeah, this is what a large part of our business is. I think every bank and every PSP is now thinking about what is my stablecoin strategy.
Yeah, yeah.
Boards are telling them, what are you doing about stablecoins? There was a lot of noise made about it in 2025. We need to solve these problems. So I'll tell you what we've been doing with PSPs in particular. So, you know, one of the major value props of PSPs is that you accept all kinds of payments and you settle as quickly as possible, right? So if you're taking card payments, can you settle same day over stablecoins with Visa as opposed to waiting multiple days for that settlement to happen? If your customers are holding funds in stablecoins, or you can quickly convert them to stablecoins, that's a value prop for e-commerce companies. And so what we do is we help those traditional Web 2 companies or PSPs access that kind of infrastructure. Because if you think about it, typically what they do is they initiate and they make payments out of bank accounts, but now they have to think about how do I integrate to multiple different blockchains? How do I create wallets for my customers? And then how do I manage that accounting and the ledger between what a customer started with, which was cash in their bank account, to then converting that to stable coins and then sending it to a recipient, and then the recipient receives it on the other side. So the way that we've solved for that problem is in our infrastructure, we give PSPs and banking partners access to blockchain infrastructure, to wallets, and we've integrated multiple payout providers where you can make B2B payments in over 130 countries. And so by building that network and creating the infrastructure that you need to connect your banking rails to, we're enable PSBs and banks to sort of plug us in and then start taking advantage of that. The reason being is like the first step in a stablecoin transaction is you take the cash and you convert it to a stablecoin. We've done that deep integration to organizations like Circle, where we can, using RTP, send funds to Circle and you get stablecoins back in 2 minutes. And then it takes another 2 minutes to send it almost anywhere in the world to a recipient wallet. And then it's up to the recipient, right? So typically it used to be that if you're a Mexican supplier, you're sending an invoice in Mexican pesos. The American buyer is like, I'll send you dollars, and I guess someone will convert it along the way and make some FX exchange. But what we're seeing is Mexican suppliers want to receive US dollars. It's very hard for them to access that through their traditional banking infrastructure, but they can access stablecoins as long as they have a connection to the internet. And so we're starting to see this change where suppliers are accepting stablecoins from their buyers and then turning around and paying their suppliers, right? We almost everybody has buys services from the US. Like we can't buy ChatGPT unless we pay in American dollars. Um, and so we're seeing that kind of infrastructure is what banks and PSPs need, that blockchain wallet and stablecoin conversion infrastructure. And that's what we've done our integration to. And then on the back end, we've integrated to all of these payout providers. So if you want to, you can convert it to Mexican pesos and receive it. But there's like a mind shift where before you would send an invoice and say, okay, pay me this and good luck to you, find a way to send it to me. Here's my bank details. Now, if you send an invoice in US dollars, you receive stablecoins. You can decide as a recipient, as a supplier, you can decide when do I want to convert this to my local currency to pay my employees. It doesn't always get converted that way. And we're seeing more and more volume happening that way. So we have been working with large banks who are converting their online business banking portals to enable customers to access stablecoins and to use stablecoins for payments. And then they plug in our infrastructure to make all of that really easy to use and quick to use. Because at the end, the value is the same. Can you do it faster? Can you do it cheaper? I think the other thing that's really interesting is, globally, there's a number of jurisdictions where people are starting to create stablecoins that are related to that jurisdiction, right? So, in the EU, there's legislation that's been passed around stablecoins. Canada just passed some legislation around. Hong Kong has legislation for you to create a Hong Kong dollar. And so you need to find the exchanges where people will convert the, USDC to a Hong Kong stablecoin. And so because we have that integration done at the blockchain level, we're able to integrate to multiple exchanges where they have that massive need on the other side, right? So if you're in Mexico, there's a lot of businesses that have this tremendous need and interest for US dollars. And there are exchanges that they typically go to get USDC to then send it for payment. So by integrating to those exchanges, we're serving a purpose in that, US businesses can make those payments and they receive them in stablecoins, and then businesses in the recipient side who have this appetite for US dollars have an ability to access them through stablecoins. And I was reading on one of the papers that like $60 trillion of global trade happens on US dollars, right? It's just global businesses think about what's the currency that I run my business on. Typically, it's US dollars. And that's why we've seen this massive increase in the number of stable coins that are issued and their use, right? I think you've seen those data points, and the amount of stablecoin payments settled is as much as Visa does, because there's more and more of traditional cross-border payments being taken over by stablecoins. I think it's important that banks, PSPs, remittance companies, they all think about how do I adopt this technology.
Yeah, but now I have some curiosities because, yeah, let's unpack a bit of what you said.
What?
So, from what you mentioned, Cybrid is something similar to a plug-in solution. And then when you said about this, you mentioned that your company, in a way, yeah, helps PSPs, banks with questions like, how do I create a wallet, or how do I integrate to a blockchain? And you actually said several other technical questions. And now I'm curious, for financials that are non-crypto native, do they know what questions to ask, or usually do you guide them? How does this work?
Well, we've done this a few times with banks and with some larger PSPs. So we guide them through a process, right? We
Ah,
sort of
okay,
there's a
okay.
bit of education that you have to start with, but I think I would say at the top, from a strategy perspective, most organizations feel that they need to figure this solution out because there's
Mhm.
demand from buyers, suppliers. And so what we do is we sort of show up and say, well, I mean, if you're a bank, we don't need to give you an integration to a bank. You already have bank accounts.
Yeah,
So in
yeah.
that context, they say to us, we already have accounts. What we need is this mechanism to take the money that's sitting in a customer's account, convert it to USDC, and put it in a wallet. Can you help us with that? And the second stage of that is, okay, we have a wallet. Now, in which scenario can we do a payout? Or how do we do a payout using that blockchain, and we help them with that. And then we provide all that data back to the PSP so that they can, in their interface, show their customers the way to go and send money cross border. So each of those steps requires a little bit of discussion with our partners and our customers, depending on their knowledge of blockchain and stable coins. And then they can use our infrastructure to sort of do that through APIs as opposed to worrying about how do I do the core blockchain integration.
Okay. And at a point, you talked about this idea of mind shift. And I was thinking, because probably we have many discussions with, yeah, banks, financial institutions, PSPs, and most probably you also encounter people that are skeptical around these solutions. And I'm curious, yeah, what is the skeptical, let's say, reaction to this type of solutions?
I think I would say it a different way. If you talk to my father, he still spends his money with cash because that's what he's used to. And if you remember when tap at point of sale came along, people were like, well, I don't know, is that secure or not? And then COVID came and everyone just started tapping because it's more convenient, right? And now and stablecoins have actually been around for almost a decade. And the original use case was for trading, but people started to see that I can actually use those stablecoins for payments. What I would say to you is that people are only hesitant because they don't necessarily understand the technology and understand what the value of the stablecoin is. When you look at what things like the Genius Act did, these are legislators, these are government employees who created a law that said this is how you go and issue a stablecoin. And typically those that happens pretty late in the stage, right? The innovators try and use things first, then legislators come along and they govern it. But the important and interesting thing was now people who use a stablecoin that meets the Genius Act, they know that it's backed by the highest quality of cash, which is short-term U.S. Treasuries. And so there's been a whole bunch of work that's been done to say the government has decided this is how we'll protect customers' funds and ensure that there's no issues with the stablecoin because you have to hold it in the highest quality of cash, which is treasuries. And that's being mimicked in lots of other jurisdictions as others think about how do I create a stablecoin. They say, well, we want to make sure it's very safe. The safest piece of cash is what is backed by the government. And so those two things, the Genius Act, plus the fact that people are starting to see their competitors and others are using stablecoins, and even users, like from a remittance perspective, are using stablecoins. We're starting to see more and more interest and more and less anxiety about what does it mean. So there's like a competitive issue as well, right? Like if you're not using it, then it
Ah, I see.
becomes you're kind of the slow, old school way of doing payments. So you might have trouble attracting customers because you can't promise the speed and the lower costs.
Yeah. And since you mentioned the Genius Act and also this idea of different jurisdictions as came up, let's tackle the regulation problem. So regulation remains a key concern, especially for cross-border payments, and with different jurisdiction taking different approaches to stablecoins. How can financial institutions balance compliance requirements while operating on global stablecoin rails?
Yeah, I think it's important to understand that stablecoins are replacing a traditional form of payment, a traditional rail. They're replacing, for example, a SWIFT payment or a wire. They're not changing the regulatory context around that, right? We're full
Mhm.
believers, like nobody wants people to be doing money laundering. Nobody wants people to be using these things for fraud. So the regulatory elements that surround a stablecoin are still important. You still need to KYC or KYB a business. You still need to know what is this business what is the business that this company is doing, and is that a business that's legitimate, or does it look like it's money laundering? So we provide the tools and we provide the infrastructure to help customers do that by giving them new tools to say, can you look at what kind of wallets someone might be using and ensure that those wallets are not being used in the context of a bad transaction. But the most important thing is, like, from a regulatory standpoint, the two things that were fixed were that everyone understands now is the stablecoin has to be backed by really high quality assets and typically treasuries. And in the US, it's US Treasuries, which is the highest quality of asset. And then the second thing that's clear is that you have to do KYB, KYC, you have to do transaction monitoring, you have to do sanction screening. That doesn't change. And so we're taking a compliance paradigm that exists today to protect customers and protect businesses, and then we're plugging in the stablecoin piece to it, right? All that still has to happen. And we've arrived at a time in an environment now where you can't go and just randomly send money somewhere and get crypto, right? Like every exchange is now making sure that they do AML to the same quality as banks. And every bank is saying to us, we need to know who we're sending the funds to. So we have to make sure we sanction screen the recipient and get the information from the recipient. So the clarity on the regulatory side allows for much higher volume on stablecoin payments because everyone knows now the stablecoin is backed by high quality treasury, and everyone knows you must follow AML measures. You must make sure that there's no fraud and money laundering happening on your platform, just as like you do today with traditional payments. So the thing that's different and that's changed is we have to provide additional data to show customers or show compliance teams, here's the KYC and KYB data that was conducted for this particular transaction if you were to send it for a business. And then that recipient business, here's how we've KYC'd and KYB'd the recipient business and their EBOs, so you feel comfortable that they're sending money to the right transaction. One thing I will say that has been actually more impressive for us is because the transactions are all digital, you have this ability to upload an invoice for every transaction. And so now you can say, is the stablecoin transaction value the same as what's in the invoice? And you can automate a lot of those processes, right? You just have to kind of like look around the corner. We're almost there where ERPs and AI agents will say, here's the invoice I received. I need to pay it. It's for the supplier. And so you have all the information available for you to do the appropriate checks before you do the payment. The payment just happens really quickly.
Yeah, so no one can deny all the benefits like, speed, cost, also transparency. And now you also mentioned regarding regulation that in a way, yeah, we are duplicating actually what we already have in financial services to make transactions safer. How do you see stablecoins in the future? Are they going to coexist with traditional payment rails? Are going to replace them? How will this dance evolve?
So I think in some use cases we're seeing much more like more of a faster shift towards stablecoins. I think in examples like remittance payments, which is not necessarily a B2B, like a P2P remittance, we're seeing more stablecoins, right? For the same use case, if I was sending money to my grandma in Mexico, I don't have to think about the pesos. I just send her $100. She receives $100. Now she decides when she wants Mexican pesos. So that's very powerful. It's a small shift, but it's powerful. But I think in the B2B side, you still have to like, it's still very difficult to make some payments without a credit card. So where you're seeing stablecoins affect that is in the settlement layer. So you still use a credit card, but the credit card is backed by a stablecoin as opposed to being backed by a debit account or a checking account with cash in that account. And so in those payments, the stable coins are still being used in the back end, but the front end is still you're using a card to enable the transaction. And then where I think that the volumes are trying to grow more and more is in just typical supplier payments, for importers of goods and services, exporters, freight forwarders, logistics companies, where you have to move, you have to send funds so that your shipment that arrived at the port gets released. You want to do that as quickly as possible because otherwise you're incurring fees, as is with one of our customers. And so those volumes of B2, those B2B volumes are growing quite quickly because businesses will adopt something that's faster, cheaper, and they feel is safe. And then on the consumer side, there's like behavior you need to get people to get comfortable with, right? And so I think that's slowly lagging. But where I see that changing is the fact that there's so much more volume on cards that are backed by stable coins because people are comfortable using their cards. They want to, click on their Apple Pay and make a payment. But if it's backed by stable coins so that the merchant gets paid immediately, I think that's a huge value prop for merchants, and that's why they accept that.
So stablecoin usage in remittance and supply chains, you mentioned with cards. What other, I don't know, payment trends should companies watch out for in this area of stablecoins by the end of 2026?
I think it's hard for me to predict the future because even in last year when we thought, here's how big the market will grow, it way outgrew what we thought it would be. I think that you're going to see a large volume of stablecoin payments being made to other countries where they also have a stablecoin, and they're also promoting locally that you use a stablecoin, right? So one of the things that we've been invited to speak with a number of regulators and legislators is on the concern that some of them have that, in the local currency, you want people to use a local stable coin and you want local banks to support a local stable coin. So the speed of the transactions continue to be quick as people expect them to. Settlement is a little bit easier because you see all the transactions on blockchains. You know it went to that wallet. You know they owe you money or whatnot. And so I think what you'll see by the end of 2026 is many more local stablecoin issued in local currencies and exchanges looking to become the market maker. So if someone wants to be the market maker between converting USDC to a Mexican stablecoin, which has recently been issued in Mexico. And so you'll start to see that both suppliers and buyers will just start to transact on stablecoins. They won't necessarily bother to convert it into a bank account. Um, and that's going to be a risk to some banks because it starts to leak some deposits out of banks. And this is why we're seeing that banks are very much interested. We have this. We've been working with a number of very large ones who are interested in figuring out how can I go and implement stablecoin infrastructure in my bank so that I can support my customers and then keep their deposits as stablecoins in our infrastructure.
And since you mentioned speaking with the banks, so this means partners and future business opportunities. Please tell us more on what's on Cybrid's roadmap for 2026.
A big part of our roadmap has really been shifting towards the larger enterprises who have more complex relationships. Large PSPs may have multiple banking relationships, and then they have this complex back office process of managing treasury across multiple banks, managing treasury across multiple regions because they're all global businesses. Typically, what happens with PSPs is they hold treasury in multiple different countries, and then they're essentially lending you funds until a settlement happens, right? It's kind of like a little bit of a dirty secret in some of these payment rails, where it feels like an instant transfer, but what they've really done is taken some of their own cash as treasury in the local country and then and delivered it that way. And what we're seeing now is large organizations are coming to us and saying, please make your infrastructure plug and play so I can plug it into all of my banking rails, but I'll manage my treasury over stable coins. And that's really what we're looking to enable our customers for as we continue to grow.
Great. So, Avinash, thank you for today's discussions. I learned a lot. And I can also draw a conclusion because you mentioned several times global economies, global e-commerce. I noticed that even our families have become global because you
Yeah.
mentioned, sending quick money quickly to your brothers in Japan. I also have a sister that is now living in Germany. So I have this feeling that even within families, we become more global. So for
I
definitely
think
we
it's
need
true.
Yeah, this problem of transaction, of paying, of moving money, we need it to be solved. As you mentioned, fast, transparent, and cheap.
That's what we're here to do. That's what we're here to do. And I agree with you. I think families are as global as businesses are.
Yeah, great. Thank you for today's interview, and I look forward to continue our conversation.
Thank you for having me. Appreciate it.